We're putting a bow on 2024 and letting you know what to expect in 2025's housing market. Let's get real and get right into it.
I keep it real, I keep it real, I keep it real, just keep it real.
Hey guys, it's Sam Hartman. As always, I'm keeping it real estate in Fort Wayne, Indiana, and I am here to bring the context and clarity that you need surrounding the real estate world so that you can be confident real estate consumers. And one of the things I'm always doing, I'm always working on, is I'm researching daily, weekly, monthly, in the real estate world and the real estate market, because I want to understand and know what's happening in the real estate world, in the mortgage world, in the world that's affecting you guys as consumers. And so one of the things I do is subscribe to a research firm called Resi Club. And I just got off a webinar where we discussed a lot of the market projections going into 2025. And so you don't have to take my word for it. You don't have to take my opinion for it. These are going to be expert entities making their opinions and projections based off of market data into the 2025 housing market. Now, I'd love to provide you some of my thoughts and opinions on it as well, and you can take that or leave it, but the data itself is what it is, and that is what we're going to cover today. So let's take a quick look back over 2024 and what happened with home prices throughout the year. And so we actually have 5 year-end reports from Freddie Mac, Zillow Home Value Index, Case-Shiller Home Price Index, FHFA, and CoreLogic. And so between these 5 different measurements, we see home prices appreciated across the United States between 2.3% and 4.4%. Now, all of these entities have a little bit varying measures of their price appreciation because they're all pulling their data in maybe different ways. Some might be using condo sales, others might not be using condo sales. So that in itself is going to affect the overall data. But you can see in all, price appreciation in 2024 across the United States ranged between 2.3% and 4.4%. Now, this is great. It's a more moderate rate of appreciation. It's not a double digit like a 10, 12, 15% appreciation like we saw in the country a few years ago. So this is going to help consumers build their nest egg that they need to save for a down payment and prepare to buy a home better going forward into the future. It's healthier for the market. It's better for the market to have this more modest and moderate price appreciation. Now, one thing I want to point out is Fort Wayne, Indiana, we saw our price appreciation finish at 5.1%. So here we are, our sweet little Fort Wayne, Indiana, our little affordable market outperforming the national average. So I absolutely love to see that. That tells me that the health of our market is strong. It tells me that people are moving to our city, not moving away from our city, and that positive things are happening because people want to buy housing in Fort Wayne. They want to move here. And that, for our market, is a really great thing. So we saw the price appreciation range between 2.3 to 4.4%. And from projections for 2024, so a year ago at this time, when we talked about projections going forward into 2024, that expectation was about 2.2%. So that was the average of all the expert entities and all of their projections saying what they thought price appreciation would be. And those averages ended up being 2.2%. But we see here, we actually did outperform that. So again, good news there. Even with interest rates remaining high throughout 2024, we saw good, moderate price appreciation that actually outperformed most expert expectations. So what do we expect in 2025 as far as price appreciation goes? And we actually have expert projections from 26 different entities. And the highest expectation, the highest estimate coming from that is Apollo Global Management saying that prices are expected to appreciate 10.8%. Now, this is an outlier. This is an anomaly. The next step down from there, price appreciation expectation is actually 5.5%. And the very bottom of the list shows a 2% price depreciation, and that's coming from Morgan Stanley. So you see there's quite a range there from 2% depreciation as high as almost 11% appreciation. But if we take the average of these forecasts, that puts us at a 2.7% price appreciation expected for 2025. So we've got a lot of expert entities here, some high, some low. Averages are a great way to kind of find that middle point, to kind of weed out some of the highs and lows and see what we might expect going forward. My personal opinion for Fort Wayne's market, because that's the market I live and work in, is I expect us to be over 5% price appreciation in 2025. So I expect that we will most likely outperform these national average expectations. And ultimately, I think we're going to outperform the national average as a whole at the end of 2025, because there are markets in the US that are struggling right now. They're struggling with very high levels of inventory. They're struggling with very high affordability problems. And these are the markets that are being hit with the hurricanes and hit with a lot of the additional expenses in housing in regards to that. So Fort Wayne, we're tucked safely in the Midwest, maybe a few windy storms, maybe a tornado every couple of years, but overall very safe in the grand scheme of those natural disasters. So I expect our market to continue to grow and continue to have strength in the price appreciation going into 2025. So I mentioned different markets being in different situations, and one of the ways we're looking at and measuring this is based off of the active inventory of homes for sale. And so what we're looking at and what we're using here is 2019 as kind of a baseline, quote unquote, normal real estate market. And many real estate markets in the US are approaching a more balanced inventory level, getting closer to those 2019 levels. And so as we see the inventory get closer and closer to those 2019 levels, the trend that we're seeing is that those price appreciations, that moderation of price appreciation is coming more and more into picture. Now, the markets that are still further away from reaching that inventory level, that still remain extremely low on inventory levels, are seeing the higher price appreciations. And then the markets that are above those 2019 levels are actually seeing low appreciation, and some markets are even depreciating in value because of the oversaturation of supply right now. So this is one of the key ways that we're looking at those trends and how those markets are reacting to the inventory in their market. So the key thing to take away here is that if the active inventory of homes for sale is above the pre-pandemic levels, those housing markets are tending to appreciate at a lower rate. If inventory is still below those 2019 levels, those are the markets that are appreciating at a quicker rate. And so let's talk about what's expected in inventory. And of the three entities that are tracking inventory and projecting inventory going into the new year, we actually see those averages to be expecting about a 12.5% increase in total inventory. And so let's take a look at how that looks here. You can see this line graph is showing inventory throughout the year. So you kind of see every peak and valley. That's what we call seasonality. Seasonality is when you have low inventory in the colder winter months, you have high inventory in the spring and summer months when more people are listing their homes. So we see this valley and peak in 2017, this valley and peak in 2018. And as we go forward, every year inventory is getting a little less and a little less in 2017, 2018, 2019. But the pandemic really shot inventory down to the bottom basement, which is one of many reasons that the real estate market was just lit on fire after the restrictions were lifted. So we got to this really low pandemic level of inventory, and we've been on a sludge, just slogging it out, working our way back up closer to these pre-pandemic levels. So again, you see the seasonality return here. We got a little bit of a boost in 2022 going into 2023. And again, this seasonality, if it continues, should bring us a little closer in line with 2019 levels across the country, but still not quite there yet, even if these projections do work out. And so with this growth of inventory, one of the things that we're seeing is that the housing market was pretty strained across the country due to lower affordability across the country. So it wasn't necessarily a brand new influx of homes hitting the market that resulted in this growth of inventory. It was actually homes that were sitting on the market longer because there wasn't as large of a buyer pool to snap them up. And so one of the trends I'm monitoring going into 2025 is what happens with this supply and demand balance. Because if we start to see mortgage rates maybe lower quicker than expected, I expect that buyer demand to come more quickly to the market. But if we continue to see interest rates stay higher for longer, which is kind of what the Federal Reserve has stated is their plan, then we might still see this growth of inventory sitting on the market longer, maybe taking a little bit longer to sell. But overall, I don't necessarily expect a really huge boost of new listing activity, but just expect that kind of lasting inventory of homes on the market to still kind of continue to sit and add to the inventory and availability for buyers. So what does that mean for the market? Well, one, sellers may need to be a little bit more patient in their home sale because days on market are growing because of more inventory and more options available for buyers. And number two, sellers should be prepared to put more energy into preparing their home to sell because buyers have high expectations. They're paying a high interest rate. They're paying a high price for the homes in today's market. So they have high expectations. So, just slapping your home on the market as is, not doing any repair work, not staging the home properly, not putting the home in its best light could really affect the timing of your sale, but also could affect the value of your sale in the end as well. And for buyers, if rates remain high going throughout 2025, you will continue to have more negotiating power than you did in the past. That's because buyer demand remains low, the higher interest rates stay. So yes, it hurts your affordability to get an interest rate at 7% or 6.5%. And yeah, I would love to see the interest rates get down to 5% this year, but I'm not sure it's going to happen. So if you're able and willing and capable of buying a home and it's on your goal list for 2025, you might actually have more negotiating power earlier in the year where interest rates are higher and then have the opportunity to negotiate a great deal on the purchase of your home and refinance your home in the future when interest rates hopefully do come down. So you heard me talk about how important the locality of real estate is. Real estate is hyper-local. And so regional bifurcation is another trend going into 2025 that we expect to continue. And what regional bifurcation means is that our regions in the country, the South, the Northeast, the Midwest, the West, places like that, the differences between those markets could be drastically different. So some regional housing markets, states like Texas and Florida and Arizona, Louisiana, inventory has risen above those 2019 levels and are experiencing some home price corrections. But meanwhile, tight sales markets, the Midwest, SoCal, the Northeast, places where there maybe isn't as much room to build new housing or grow the housing stock, those are the markets that are seeing greater price gains. So here's the big wild card for 2025. It's interest rates. If interest rates come down quicker than expected, it could push buyer demand into the market sooner. But all things considered, the Federal Reserve has made their case known that they plan to make interest rates higher for longer. They've literally said those words out of their mouth. So we should really take their words at face value and have that as our expectation going into 2025. And so among 14 rate forecasters that Resi Club tracked, the average model expects the 30-year fixed rate at the end of 2025 to be 6.34%. And right now, today, as I'm recording this video, interest rates are above 7%. So that would be good relief by the end of the year, but that would be an end of the year projection. We still have a long road to go before getting there. And so I expect it to be a little volatile. I expect it to be a little bit of a bumpy road working its way down to that 6.34. And I wouldn't be surprised if it finished above that by the end of the year, just because the Federal Reserve has showed us how conservative they're being with their interest rate policy. So I don't want you to bank on that by the end of the year, but what I do want buyers to do is I want you to plan based off of the picture that's in front of you. We don't know where interest rates will be in a year, but let's look at where they are today. And let's put that budget and that plan together for you as a buyer in today's market. And if they get better in the future, phenomenal. Your affordability gets better. You can afford more house. You could have a lower payment monthly if they go down. So these would all be great things, but let's not plan for the best case scenario. Let's plan for the scenario that we're looking at now and make the best decisions for you and your family going forward. And so if we want to know or expect where interest rates might be going, if we want a leading indicator in that realm, what we want to look at is the labor market, because that has really been what it seems the Federal Reserve is tying their policy to. Yes, they want to keep inflation low, but bringing inflation down has not had the response to the Fed policy that we've expected. What has, though, is their response to the job market. So the more softening we see in the job market could help the Federal Reserve pivot their monetary policy and could bring interest rates down more quickly. And so where does that leave us for 2025? Well, we might be looking at another year of the housing market being pretty suppressed. And here's what that means. Accounting for population size changes, the existing sales volume of homes in the United States is near record lows. We saw just over 4 million home sales, and adjusted for how much our population has grown, that is one of the lowest years on record as it relates to a fraction to the population and who really should be in housing as well. So lower home sales, but even though we've had a few years of suppressed home sales, we've still seen home price appreciation. So even though we're expecting maybe another year of lower home sales, we're still not expecting any major correction, any sort of crash in price appreciation. We're just seeing that moderation in the price appreciation. And here's why that is, because switching cost is high to the homeowner in today's market. Over 73% of homeowners have an interest rate below 5%. So for that home buyer to go out and want to buy a new home or make a change, they'd be trading in that lower interest rate for one that's in the 7s today, or maybe in the upper 6s, depending on when you're seeing this video. But the switching cost is high, and that is one of the things that is suppressing the overall market in terms of new listings and the sellers that would be in the market and searching for a new home. Now, here's the thing. Switching costs are higher, but I'm working with a lot of buyers and sellers right now that are making that decision anyway. And here's why. Pain and pleasure. They've got pain in their life that makes them want to move. They're pursuing pleasure in life, and that makes them want to move. Those are the two reasons really we make any decision in life. And so ultimately what you need to consider is the pain worth the change? Is the pursuit of pleasure worth the change? And a lot of consumers are still deciding to push forward and make that decision. So if you're wondering if it's the right time for you to buy or sell a house, always know that I'm here for a consultation. I'm here to be your advisor. So don't hesitate to reach out with your questions and we'll get working with you. And so that is a snapshot into what 2025 might look like. But rest assured, guys, I am always monitoring the micro and macro real estate trends. I want to know what's happening in our real estate world so I can bring it to you and help you be informed real estate consumers. And so as this year plays out, I'm going to be bringing you updated videos. I'm going to be bringing you the latest market data so that you can make educated and informed real estate decisions. If you like this video, like and subscribe so you don't miss the next one. If you know someone else that could benefit from this information, I hope you'll share this video with them. With that, Happy New Year, have a great 2025, and I'll see you out there.
I keep it real, just keep it real.